What is the aperture? The aperture of your trading. Ever think about that? Anyone ever ask you that? I'm Bagger Don at StockMarketCaddy.com. Today is February 23rd at 12:50. I am not a financial advisor. I'm not a broker or a broker. We are a mentoring site where we like to teach our private members tools, signals, algorithms, everything to look at the markets in a much different way than anyone else. And one of the things that we teach, and I'm going to share this with everybody at YouTube, I apologize for the quality of the video at YouTube. Our members get high definition videos from us and get real time high definition broadcasts from us. But YouTube videos are free, and the quality is what it is. So feel free to turn it on to the maximum high def. You're looking at a chart that we call a three-line break chart, and in essence, this is the three-line break of the S&P on a 10-minute basis, or the ES contract. It's a futures contract. And you can see where price dropped down. This was earlier today. Then we rallied up. Then we rallied back down, and we rallied back up. And you can see that we're breaking down now. Now, we refer to this type of setup as the kill zone. The kill zone, and this happens on any kind of time frame. Happens intraday, happens on daily and weekly. And most people miss the big move, and then they get caught up and start arguing and pushing shares around and contracts around, trying to catch the next big move. And many times it's not in the direction that they think. The style of trading, what you really want to be doing is identifying when the kill zone sets up and staying away from the middle of the kill zone. It's fine to put on a trade up in here, to ride it down to possibly here, and if you're fortunate enough for it to break, to stay in the trade, you put on a buy here. But you wouldn't be buying here and necessarily, and you certainly wouldn't be buying or selling in the middle of the kill zone. But the purpose of this video is to talk about the aperture. The aperture. What do I mean by that? It's really important to understand the charts that you're using. Now, most people use time charts because that's what E-Trade, gives you. And so let's talk about, although this is not based on time, this is pure price action. See, I like to use price charts, not just line break, but all price charts, because I see the price clearly and it's not distorted by time. But if you're looking at a daily time chart, sometimes you might want to look at a weekly, maybe once a week at the end of the week, a monthly time frame at the end of the month. And you might want to look at that once or twice because you want to take a wider view. You want to see a larger aperture of the market. Because some people, they're trading or investing based on weekly views or on monthly views. So if you're trading daily, you might want to see what they see or what they think they see. Now, when you're trading, when you widen out your aperture, when you go from a daily to a weekly to a monthly, yes, your payouts will be significantly greater than the shorter time frame. No question about it. However, your risk is also much greater, and your drawdowns will be much greater. And you need a greater degree of confidence, and with it comes a greater degree of patience. Now, that's hard to do in the beginning. Very, very hard to do, even for an experienced trader. Because if you're patient for 2, 3, 4, 5, 6 months, which sometimes you have to be on a monthly aperture, if you're wrong, you could go out of business. So many people will start with a daily. And they'll have a fair degree of success maybe, or they'll hit on a few trades and they say, geez, they take that same view and or whatever it is they're set up and they go down to a 2-hour time frame. They say, if I can do it on a daily, I'll do it on a 2 hours. I'll be even richer. Then they go to it an hour, and then they go to minutes, and then they go to seconds maybe. Now, when you're tightening the aperture, when you're going from your daily to intraday, your profits will not be as great. Makes sense. Your risk should not be increasing. They should be decreasing. Also, though, you must be a more impatient trader. You must be decisive, and you must be even more disciplined, because you have to exit at minimum on the time frame that you came in on. You don't want to be trading on a 10-minute time frame and then trying to exit on a daily, get you in a lot of trouble. If you trade on a 1 hour and come out 10 minutes later, that's okay. Also, when you close down the aperture, you trade more frequently. There are more decisions to make. There's a higher cost of trading. And also, you need to be aware that if you put on an intraday trade and you're still holding that trade a day later, 2 weeks later, 2 months later, 2 years later, then you're out of control. You're going down the mountain snow plowing, and you're going to hit a rock, you're going to hit some trees, you're just going to have, you're skiing out of control. So you really got to know your aperture of your trading, and you got to know and have a disciplined approach to it, and you have to know what works and what doesn't work, and what the characteristics are of each. What most people will do when they drop down to their get more tighter view or tighter aperture is they will be inclined to take their profits real quick and let their losers run. It's called eating like a bird, pooping like an elephant. Very bad. It's very bad overall, and you want to let your winners run and cut your losses. That's why we use technology and our algorithms and all of that, which, by the way, I just want to share with everybody. If this type of approach resonates with you, our members only pay $99 a month to get high-def videos every night and all kinds of stuff every month. Learn a ton. Then those that also want to trade with us intraday, they get a high-tech, high-definition view of our signals. And guess what? They also get, for that membership, it's $400 plus their monthly membership, which is $500. They get all of our customary proprietary indicators. They get all of our algorithms, all of them. I get a kick out of some people. They got these out, they call it an algo. I don't know what the hell it is, but we show you the back test results, the forward test results. We trade it ourselves. We tell you the weaknesses. I mean, we actually show you, and we just don't have one. They'll come up with one and be selling it to you. Get a lifetime membership of advisement or something, and they want $7,000 or $8,000. We don't do that. You're a member for intraday, you're trading, you get everything that we get, and it's month to month. It's month to month. But back to the aperture, I want to do something. I want to show you this now. I'm going to come in here, and I'm going to change this to a 60-minute. Watch what happens to the kill zone. Doesn't look so big, right? Doesn't look so big. And now you're looking like, well, why would I even want to trade that? I want to trade this. Well, sure you do. But you got to decide what you got to, you trade. This is on a 1 hour time frame. Well, with the 1 hour comes a lot more risk than the 10-minute. Nothing wrong with trading the 10-minute, but boy, you got to, in order to capture this, you got to be trading a lot. You can't just trade once. You got to trade a lot. Just like I said, the smaller the aperture, the more active you got to be. The larger the aperture, sure you don't trade as much, but you better know what you're doing, because you certainly wouldn't want to be on the wrong side of this trade. All right, see how it changes, and it changes the dynamics of everything. What happens when we go to a daily? And this is why most people, probably don't make money over the long term. Let's change this to a daily. See, there's actually a candle back here. Here's the daily trade. The daily trade is probably still ongoing. Look what happened to the aperture on the 10-minute. It's not even there anymore. The kill zone, not even there. Can't even see it. Even on the 1 hour, can't even see it. There are people like me trading in and underneath you. You see, when we come back, and I only got a couple of minutes on YouTube, let me just show you how precisely. See, I used to teach surgeons surgery. That's my background. We trade with surgical precision. We put this trade on right here. A leverage trade, and we're up right now close to, well, we're up about 10%, a couple $100 though, and we're hoping, we're expecting, we're up a little bit more, we're expecting to take this down here just today. And this trade will probably, we expect, we're planning that this trade could pay us $1,500, $2,000. And if you're on a 1 hour, I don't know what other people are doing. If you're on a daily, you're sitting back, you're hoping. Be honest with you, with a daily aperture, you probably shouldn't even be watching any intraday. But your entries better be precise, because if you're in here someplace, come back to the daily. See, we got our traders in up in here. If you came in down here, you're out of control. You're going down the mountain, snow plowing. Folks, I'm Bagadon at StockMarketCaddy.com. Please look at our Twitter feeds. Look at some of the calls that we've put out. We put them out for educational purposes to show average people like us that you can do this. We don't use moving averages. We use algorithms. We've been doing this for 15 to 20 years. We trade our own money. We're trying to demonstrate, but we also put out educational videos. And ask yourself, look at the dynamic yield curve and some of the other videos that we put out. Do you learn any of this from anyone else that's out there? No. We're very unique. And one thing that we promise everybody, you will have fun. You will learn. Okay, and we will save you money. Can't promise you that you're going to make money, but we can promise you you'll have fun, that you'll learn, and that we will save you money. You stay as long as you like. No golden handcuffs, no 50% off if you give me a 10-year commitment. We don't want that. I want you to stay because you're having fun, making money, contributing to other folks in our private club. It's like belonging to the Augusta National of trading. It really is. We don't advertise. We don't have a bunch of advertisements. And in part because I don't want a bunch of yahoos in this club. I don't want a bunch of, just people that don't want to take control over this part of their life. And I am dead serious about it. I work extremely hard, my wife and I, to do what we do within the markets, but also to make sure that, we're doing the level best we can to help folks, all right, that are in our club. So in any case, if it resonates with you, feel free to give me a call, 813-758-8263. Feel free to drop me an email. Feel free to join for a month or two. See what you see. Right now, that trade, by the way, is up 16.44%. We're up about $250, 200 some odd dollars. We're on our way. We are, just skiing down the mountain. Not a problem. Best of luck, everybody.